Hi, we're going to jump into why the market crashed today or pulled back today. We've been talking about this in previous videos about watching out for the things that the big guys, the smart money is doing, and particularly the bond market and the yields, focusing on those, the 10-year and 30-year yield. They've been running up. And I've been talking about this down here where the Fed started pivoting and started to cut rates back here in September 18th. September 18th, they cut rates. And then what happened was the interest rates, which should have gone down in anticipation, actually went up, which is going against what they wanted it to do. So what I've been talking about is why it's been going up, because the bond market, the smart money, thinks inflation is either sticky or it's going up. Today, we got the unemployment rate, the unemployment report. And so there were added jobs that came up today, which if you look here, 4.1%. So the unemployment rate dropped from 4.2 to 4.1 because the US added 256,000 jobs. You say that's a good thing. And we say that, okay, jobs growth is good for the economy. Job growth is always good, but it's not good when you have inflation you're trying to stomp out. You have the Fed cutting rates, you have inflation going up still while they're cutting rates, when the mission is to get inflation down. So the bond market pretty much have seen this coming before. That's why when the Fed started cutting rates, it sends a message that when the yields start going up, that means that the market believes that the Fed has cut rates too early. We've been through this before during the Volcker times when they cut interest rates too early, when they were trying to stomp out inflation, and it turned around and inflation went higher, became a serious problem. So they had to raise rates again, almost 20%, went to 20, which was insane. So I think the market is looking at the same type of deal coming to pass. We have big data coming out next week. We have the CPI report comes out, I believe, on Wednesday. Take a look at that. On Wednesday here, and PPI on Monday. Those are the biggest ones coming out. We have retail sales coming out Thursday. So we still have some data coming out that's really important that we need to watch out for. But the market sold off today. So looking at yields here at the 10-year yield, and you should watch yields if you're trading stocks, day trading stocks, swing trading stocks, or whatever, dealing with anything with the market, you need to pay attention to the yield. Again, the Fed cut rates down here. Right? Market ran up and then it still jumped up even higher, breaking above these levels that I'm marking on these charts here. And so what I'm looking at is, and I turn my stuff green as support, as price starts to move outside or above an area, I usually change my key levels to support or key zones to support. And we have this coming up into resistance. This is all-time highs up here in this area around 5%. In the last video I talked about, you do not want this to hit 5%, but it's breaking out and it's on its way to that 5% area. Let's take a look at the SPY today, right? The SPY, we've been talking about this channel in my other videos. If you've been watching, SPY's been in this channel since about August of last year. August of last year, we got into this channel up here, and we've been bouncing up in between it, from the bottom part of it to the top. Now we have a key situation. That key situation is we have broken out the bottom of that trend line, from this channel. We've come down into key level support is right in this area. And we held that 576 line. I am definitely watching to see if this price comes down and takes this out. If not, if it does, we start talking about 568s. And if we break 568s, we have a lot lower to go on the SPY, down to 548s. So I think we still have some more downside that's coming, because I believe inflation is increased. I believe that the market is sniffing this out. I believe the market is starting to sell off. And we have other situations or other stocks to watch, like Apple today, that came out that had broken a key level. And I want to show you this. So we've been selling off this is a turning point. You have a doji at the top of a long trend. So when you have a doji at the top of a long trend, you want to see confirmation. These 3 days right here were key for confirmation of a reversal from the trend going up. You have a big green candle, you have a doji at the top, and you have a red breaking below this level here. Then you finally gapped down and broke below and started your downtrend. Now, one thing you need to watch out for, which I was watching out for, which is not on here, which I'm going to put up on the chart, is the moving averages. We just broke on Apple below the 50-day moving average. That is a bearish signal to market, right? That is a bearish signal to investors, a bearish signal to the market that this is getting weak. Now, one thing we did do is we did hold this bottom of this trend line in this channel on Apple. And by doing so, this is what you want to watch out for next week. If we get CPI, PPI, CPI numbers that are coming in out of sync with Fed policy or Fed predictions of inflation going down, you could probably see this coming down and retesting this line here at 234s, 233s area. And if we break out of this trend line, we have a long way down. Now, there's something on Apple that I've been watching for a minute and something we've been talking about in the videos. There's a gap down here at this 180s level to 172s that needs to be filled. There's a rule in trading. All gaps must be filled at some point. So not saying that point is next week, not saying that point is next month, but we're looking at a lot of bearish signals. This is termed bearish on Apple. If we break this level with this trend line here next week, based on some of the data that comes out, the CPI or PPI data, retail sales could do it as well. We can start getting into this trend down to this level here. There is a stop right about 196s that we can look for support. All of this up here, down past this level, around 208 area is another area of support. But if we break out of here, there's not much to stop this from going to 208s on Apple. So watching out for that. Let's take a look at NVIDIA, because NVIDIA had a move today as well. NVIDIA's been selling off, and one thing, I have my moving averages up now so you guys can see this. The moving averages don't lie. Yields don't lie. You have a gap that got filled right here. This little green area here got filled, only gap down today. Tried to go up and reclaim what? The 50-day moving average. Got rejected, came down to this level here, and we held up. Now there's some support, a little bit of support in this area, but not a lot, right? There's not a lot of support here. Green. We're holding it. But again, data next week, PPI, CPI, retail sale can come and take this out. We're talking about NVIDIA coming down to 128s, if not lower. Now, NVIDIA is one that moves in big ranges. I like to trade NVIDIA. I've taken a lot of short plays on NVIDIA, watching these levels. I talked about this in my other video. I talked about how this hit a double top area, right, on NVIDIA and got rejected. Right here, double top, rejected, sold all the way off, held a but closed right, did smack on the 50-day moving average, and now we're below it. Things are moving below, large caps, especially in the tech sector, is moving below the 50-day moving average. That is a key bearish signal. Moving below is different from closing below. They have closed below the 50-day moving average. So they tried to reclaim it, got rejected. Now that's typical, right? When the first break below a moving day average, I start to look for, especially the 50, I start to look for a retest of trying to reclaim that level. And I look for a rejection or for a break above that shows bullishness. But this time we tried to retest it, got rejected up here and closed below. So let's take a look at Tesla today. So Tesla has been moving around, fighting this, right? Tesla's been running up. They really ran up on the Trump winning the election. So therefore, it's running up on fluff, right? I call it fluff news. There's nothing that Tesla has done that warrants them to have that big rally up outside of Elon's relationship with Trump and him possibly playing a particular role in the administration. So the Tesla stock just ran up because of that. So now we're looking at Tesla pretty much in this area here. Look, in this area, I call this consolidation because it just chopped around in the zone. It did hit a high up here of 490, never hit 500. And now we've broken below this level here, 415s. We are below 400. We tried to reclaim 400 today. That did not work out. That got rejected. This is a key level here, 372s. But what I'm looking for is movement on Tesla down to test, because it's so close. It's like a magnet. So these 50-day, 100-day, 200-day moving averages are like magnets to pull down. One thing I do want to show you in particular, and come back to Tesla in a second, I want to finish up the SPY. So putting a moving average on the SPY, what you see here is what? It closed dead smack on the 100-day moving average. Moving averages, these three in particular moving averages, are something that I keep and I watch, especially on a daily chart, further out charts, daily, weekly, and monthly, daily and weekly mainly, are critical because they show possible trend changes when they come into those areas. The market closed on the 100-day moving average. It got below it, pushed back up, and closed above it. So now we're looking at, which I believe the market's looking at, is what data is going to come out next week. What is the CPI report going to tell us? What is the PPI report going to tell us about the trend and where the economy is at, essentially going or at, so they can make their positions on what they're going to do in the future for the equities. Now, I will say this as well. This is a new year. So all of the bullishness that you see here, actually more than that, let's go back here, from the Fed's October 23rd pivot, essentially they stopped hiking rates. They pivoted. The market has rallied, massive rally up. If you look here, all right, we've gone up 47% on the S&P 500. That's massive, a massive move, right? 47% upside. That's a lot of profit. No real profit taking here. So if you think about taxes and you think about that situation, not a tax attorney, anything like that, but if you think about taxes, and if you have all of these profits up here, if you held them when the clock ticked over to 2025, for me, it's best to start taking profits around now because I won't have to pay taxes on that until 2026. If I was to take profits on this in 2024, then I have to pay taxes on this in 2025. So it's prudent for possible market makers and institutions to say, you know what, let me just go ahead and cash out now. I won't have to worry about this till 2026. Let's see where we go. Let's get it down, get the prices down a little bit lower, buy low, sell high. We all know that, so that I'm able to buy low and still push those profits into the following year. The market does run up again at some point this year, later on this year, after a significant pullback, then those profits don't need to be paid, right, taxes until the following year if they cash out in 2026. So that means 2027, they can cash that out. That's how this game pretty much works. I'm sure there's terms you've heard of, if you're not before familiar with. Tax harvesting is when institutions or equities start to sell off the ones that are losers, because you can essentially write those off on your taxes. So you need to know where you're at, what type of market you're in. Political environment is very tumultuous, right? There's a change of guard. There's going from Democrats to Republicans. So policies are going to start to shift and change. The market is watching that as well. You need to still keep in mind some of the things like the carry trade that's been over in Japan. That's still present. We have China having issues in their market. So the market structure, the global market, economic market, is something to watch out for as well, because it seems to be all over the place and a little bit uneasy. Our market in the United States, the economy here, is showing signs of inflation going up and inflation being sticky, in my opinion, based on what I'm seeing, when I'm reading, when I look at the bond market, the yields, right? This is the 20-year, 30-year yield, 30 years running up. Now, 30-year typically is associated with, again, your mortgage rates, right? You're seeing mortgage rates go higher and higher. 7-year, 7%, 8%. Just think about that for a minute. If inflation is going up, and if the Fed has been cutting rates too fast, they cut rates too fast, and based on the job market, you have all these job growth, which means more spend. That's what it means to the market. Higher job growth, excessive, more than what the anticipated target is, expectations is that, well, wait a minute, they're spending more money. That's what it's signaling to the market. So that the Fed cut rates too early. Now, if those numbers in the job market would have come in line, I don't think we would have had what we had today. I think it would have just been on pace for what the Fed's predictions is, but it didn't do that. So the market has been sniffing this out a little bit early, as you can tell, because as they started pivoting back in September, the yields have gone up. So you need to be careful out here. Some equities out here, I'm still watching the SPY. I like watching the 𝐾𝐭 as well. The same deal. Let's talk about that for a second. That broke below the 50-day moving average. Right here, closed below the 50-day moving average. Been tracking this line. It broke below this trend line, this major trend line here, since back in, I think probably, I was looking at here, August as well. Same thing as August, same thing as the SPY back in August. What I noticed here, and I'll take this line off, I was watching this upper trend line that it could not break above when it got this all-time high, right? Back here at 538, 540s, we had an all-time high. And what happened was it rejected, it started. So once you start seeing wicks or bodies more than two, so I talk about this in my technical analysis in the course, or the foundational KISS course, how to read support and resistance lines, how to read trend lines and what they are, and where to draw them from. So one of the ways you draw them is if you have two or more pivot points along the same path, then you can draw a line. Let's see where that goes. So before these formulated here and here, or even here, I saw these two, so I drew a line. And as price came into that area, I watched to see how it reacts in that area. Does it reject? It rejected, came down, pushed back up to that same line that was already drawn from these two candlesticks that we saw here. It rejected it. So it's respecting that line. These, take this off here. This here is what you call a false breakout, right? Got above it, got rejected, got above it, got rejected, came all the way down. And now we're starting this downtrend. Again, this is bearish, where it's closing below the 50-day moving average on multiple equities, especially key ones like the S&P 500, the NASDAQ, the triple Qs, the behemoths, right? NVIDIA, Apple, largest market caps, like in the sector, they're closing below. And what that signaling is, I think Apple has been running up again, just Tesla here, right, on air, right? There's nothing the company has been doing or have done to warrant it to run up the way it's been running since Trump got reelected, right? Tesla's still holding above the 50-day moving average. We're watching out for that to come down, at least tested at 364s. Just to recap here, Apple has closed below it. That's extremely bearish. We're watching to see if that breaks below this trend line we have here right now. The bottom of this is 233.11s. Now, as you start moving up in days, that area gets closer and closer to where price is currently closed at here, 236.85s. This could break down even lower if we come down here and just break this trend line. I'm targeting 207s on Apple to come down, and then NVIDIA, which we looked at earlier, again, held support here around 134s area, 130s area, popped up, did fill this gap here on the downside. This getting near the 100-day moving average. You can see how price respects it. The 100-day moving average around here. These are why these moving averages play an important role when you start doing technical analysis as it comes down into this area. So I'm watching to see if this comes down to 132, if it can hold above or bounce back up, or is it going to come down lower? Now, I think a lot of that information is going to really depend on what data comes out next week, what the CPI report shows you, what the PPI report shows you. Again, don't just look at stocks. You need to look at the macro environment as well. You need to understand yields. You need to understand how the bond market works, because the bond market normally tells me what's really coming or what's going to happen. Just like in trading today, as the market tried to push back up, the yields were going up at the same time. So what that told me was the market may be getting ready to turn around and go back the opposite direction. That's exactly what the market did. This is Hank from SixFourTrading. I hope this helps you. I hope that you get something from this. And if you need more information, if you want to learn how to do this, you want to know how to chart, you want to know how to learn how to do technical analysis, you want to be a part of a great community, look in the description, join us. And then so we all can prosper together. We can learn together and educate together so we can all achieve our goals in the financial arena. Again, Hank, SixFourTrading. Hope you do well. Have a great weekend. Talk to you guys later.